We're here on the floor of the New York Stock Exchange. The Fed Reserve rate decision did come out, and as expected, interest rates were left unchanged. But the Fed Reserve announced its plans to begin unwinding its balance sheet. So joining me now is Stephen Guilfoyle of Sarge 986. Sarge, great to have you here today.
Oh, the pleasure's mine. Thank you for having me, Remy.
Well, we were all waiting for this Fed rate announcement, and as Janet Yellen talked, we are seeing the equity markets per earlier session weakness. Now, for now, we are seeing mostly flat trading for the equities. The dollar is higher, Treasury yields are up. But what does this mean for the equity markets going forward?
Well, the rally we've had in equities is largely dependent on earnings expansion and a cheap dollar. So this was priced in. This is not a surprise by any stretch. I think this does matter. I mean, they are in tightening monetary conditions to some degree. You can tell from the projections that they do intend to raise the Fed funds rate in December. So they are at least portraying themselves as hawkish at this time. You're going to see the banks pop on this, but I don't think the rest of the equity market is really going to move around all that much. And as far as that December rate hike goes, they're going to change their mind, or at least they're going to change your mind and my mind 6 times over as we get there, as they float trial balloons with each Fed speaker portraying themselves as either a dove or a hawk and seeing how the markets respond to it.
And of course, we do have to keep in mind that inflation numbers will continue to be monitored here in the U.S. Now, as we head into the rest of this year, as you mentioned, expectations will continue to be monitored for the December rate hike. But as we head into next year, what do you expect to see?
I'm really disappointed in the Fed forecasts as far as their inflation expectations go and their interest rate expectations go, as well as GDP. See, they didn't really adjust what I was looking for them to adjust in this month's forecasts. They still expect GDP to actually pop a little bit this year, but then gradually tail off over the next 3 or 4 years. They expect inflation to top off at 2% and flatline from there, yet they expect to get away with interest rate hikes that will take us to 2.1% for the Fed funds rate next year, 2.7% the year after, and maybe 3% after that.
And I know that we don't usually talk sports, but there are plenty of analogies that we can make with the market and sports. So I do want to get your take on a baseball analogy. What inning do you think we're in right now?
All right, as long as we see a cheaper dollar, which I think we will, because the Bank of Japan is still buying assets pretty aggressively. The ECB is still buying assets pretty aggressively. We might get a rate hike in the BOE pretty soon. Retail sales were strong this morning, but the rest of the world is well behind the Fed on tightening monetary conditions. I think they need to, but they're not there yet. And there's going to be some hot political debate when they get to the point where they want to go there. I think if it's one game, we're in the 4th inning. If it's the 8th inning, well, we're playing 2. It's a doubleheader. It's Ernie Banks used to say, let's play 2. I think we're going to play 2. It may get sloppy. I think as monetary conditions do tighten, the Fed may be forced to halt or back off at some point. I know they don't want to get the balance sheet all the way down to $800 or $900 billion like it used to be before 2008, but they may be satisfied with $2.5 to $3.5 trillion. I think it might be a long, protracted bull market that will end who knows where. I'm not going to call a top.
Okay, now, Sarge, last but not least, before I let you go, I do want to get your take on what we're going to be seeing this weekend over in Germany. Now, a lot of attention has been placed on politics as well as geopolitics, especially with the General Assembly taking place this week. But what do you expect to see from that election?
I think, call me crazy, but a bigger story than the German election is the OPEC meeting on Friday. The German election, like this move by the Fed, is probably priced in. Where's the market now? The market's down a little bit, but it has bounced off the lows. I think the German election is almost a foregone conclusion, maybe. But the OPEC meeting certainly is not. The Iraqi oil minister kind of gave markets hope yesterday. Oil's trading around 50.5 now, at a barrel, WTI crude, that is. But OPEC oil ministers typically talk up oil as we go into these meetings. I think they might actually let the world know that they're going to push cuts, or maybe not cut further, but push the cuts out towards the end of 2018. I'm still long a few oil names myself. I'm not going to sell them the next 2 days. I'm going to go into that meeting wearing those positions.
Well, as always, Stephen, great to have you here on the floor, and thank you so much for your insight after the Fed rate announcement.
Anytime, Remy.